All right, good morning, everybody. In today's trading lesson, we're going to be talking about overbought and oversold. If you've listened to me, you've heard me use these terms many times. And today I'm going to show you what they are and different ways that you can take advantage of them. Basically, if you hear something is overbought or oversold, you should pay attention because it's either going to do one of two things. It's going to start a new trend or it's going to revert back to the mean. And most of the time it's reverting back to the mean in my experience, especially when we get to supply and demand levels or support and resistance levels. So we're going to be taking a look at that too. So just a couple quick words on my philosophy here or method. I really want to teach students about something that I kind of call market equilibrium analysis. I mean, technically, it's technical analysis, I guess, and I've been a technician for 20 years, and I've been a member of the CMT Association, which used to be the Market Technicians Association for 20 years or whatever, 17 years. I don't even want to think about how long it's been. But anyway, it's unfortunate because technical analysis is widely disrespected, and I could see why, because people do these ridiculous things like harmonic charts or Gann theory or Elliott waves. I mean, to me, this stuff is like Bigfoot and UFOs, right? It's fun to talk about, but it's really not credible. And remember, I'm not just some guy who read a book on this stuff. I mean, I was an institutional trader for 20 years, and when you are with something for that long, you become competent at it, right? You don't need to be a genius, but if you do the same thing every day for 20 years and you're, smart or slightly smarter than average, you can come away with some things. So there is validity to some types of technical analysis. And these are things such as the identification of support and resistance levels, momentum studies, which is what we're going to be looking at today, studying trend lines, and even in some of the classic chart patterns, there's some validity. But that is a different lesson, which we're going to probably get to by the end of this week. Ultimately, I want you to learn how to develop your own strategies, so you don't have to pay attention to people on CNBC or people in the fake financial news media. But at the end of the day, people that have been doing this for a long time realize that there is no holy grail. There is no system that's always right or wrong. The secret, quote unquote, to making money lies in psychology and risk management. A lot of people will be surprised to hear that the best traders on Wall Street, and when I say traders, I mean proprietary traders, are only right 58% of the time. So it's not like they have some magical systems that are right 100% of the time. All right, so let's talk about overbought and oversold and what they mean. Um, Basically, momentum is a measure of how far a security's price is today, uh, how far it is away from a price uh, X days ago. And I see here I put in prince, which I need to change that. But I guess if you follow these rules, you can become rich as a prince. Ha, 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 ha. So anyway, this is kind of the formal definition. It's when a security that traders and analysts believe is trading below its true value. Overbought is the opposite, when it's trading above its true value, generally short term as opposed to long term conditions. Now, my definition as a trader, as someone who's looking for reversions, is something is overbought or oversold when it's more than two standard deviations away from its average price. Okay. And what do I mean by average price? Well, a real simple way to do it would be to take the prior 20 days and take the closing price, add them all up, divide it by 20, and there's your average. There are way more sophisticated ways to do this. People use various time frames, but this is just for illustrative purposes. And one of the important things you have to realize when we get to the next page and talk about oscillators is that they just come with default settings. What you really need to do is try to tune it in to each particular security. Like, for instance, this method might work better with a particular security if you use 30 days or 50 days or 7 days. You just have to research it and experiment it. So as we all remember from statistics, right, not me, I had to look this up on Wikipedia, but anyway, within 2 standard deviations of the average price, 95% of all price movement should be there. So when it gets out of it, it's time to pay attention, because this means that one of two things are going to happen. It's going to start a new trend, or it's going to revert to its mean. Now, these are some ways that momentum can be defined, and overboughtness and oversoldness can be defined. This is what I like to use, a relative strength indicator. Very simple, was developed by Wells Wilder, who's one of the titans of technical analysis. Has a great book. I recommend you read it. Even though it's old, it's still a classic. But anyway, for you guys that like formulas, here's the formula. So, 100 minus 100 divided by 1 plus RS, where that's the average gain divided by the average loss. Rate of change is another simple one. It just measures how far away a price is from a prior price in terms of percentage. Stochastics, I put this on here because I think a lot of people like to say stochastics because they think it makes them look smart. This one's a little bit more complicated. It uses some of this highest low, or current lows minus highest low divided by highest high minus low, or minus high low times this times that. You can look into it more if you want to. But here's the thing about all these oscillators, and there's a lot more. There's the Williams, there's the CCI. They all pretty much measure the same thing. So in my opinion, it's really kind of ridiculous to look at more than two of these things at the max. I mean, I look at RSI and I look at Bollinger Bands. Those are my two things. And I would recommend that you pick one or two that you like and really get good with them, and whatever you're trading, get rid of the defaults and try to optimize them and figure out what's the best thing to do. It's pointless. I mean, I've seen traders that have like 8 of these things on their chart. To me, that's just pointless because they all measure the same thing. And I mentioned Bollinger Bands. These really aren't an oscillator, so to speak. They're volatility bands. And what these do is they measure the 2 standard deviations that I talked about. If it's above the top Bollinger Band, then it's more than 2 standard deviations above the average trading price. And if it's below the lower Bollinger Band, then it's more than 2 standard deviations below. All right, now here's just some examples, just so you can kind of see what I'm talking about here. This stock, EPZM, I don't even know what it is, but I just did a Google search on volatile stocks, and this came up. So you can see how these things all correspond, right? So say up here, you can tell it's overbought because it's above the standard deviation band or the Bollinger Band. Well, you get the same signal here, and you get the same signal here, and you get the same signal down here. And I mean, of course, they're a little different, but that's why you shouldn't use more than one or two. Just really master. I mean, you can see here oversold, and down here, down here. Let's see, where's another example? This is a good one here. So overbought here. You can see overbought there, overbought there, overbought there. There are different ways that traders use these things, and there's all kinds of signals. Someone might say, oh, here's my signal, crossing the top, becoming overbought. Time to put in a trade. Someone might say, oh, here's an extreme. Time to put in a trade. Someone might say, oh, it's reversion. Now, that's kind of what I use, is I like reversion. I use the Bollinger Bands for reversion for my trades. Like, here's a good example here, right? It gets below the Bollinger Band, but then once it gets back above it, that's the reversion. That's the entry. Below the band, don't do anything, gets back above the band, that's where you enter, because that's reversion. Like you can even see here, these things, just the way they're constructed, and Bollinger himself, and I recommend you check out his website, because I think Bollinger Bands is, probably led me to make more successful trades in my career than anything else. It's brilliant, and it's simple. So he even says himself that things can walk down, these things, just because how they're constructed. Look, it walks down, and then when it gets below, so you're not doing anything, but once it reverts, you enter your trade. And in this case, you probably didn't make a lot of money, but you didn't lose any either. So This is from a few days ago. I don't know what's going on with this thing today, but I think it was earnings. For some reason, it got very oversold. All right, so just let's look at another one. Okay, here's the same thing with Intel. You can see these things all kind of work together because they're all measuring the same thing, right? Overbought, 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 overbought. So I think even if you use more than two or two, if you use three, four, or five, you're probably just going to get confused because you can see they're all a little bit different. But like I said, that's because these are just the defaults that I'm using, the stuff that comes in the software. If I was really going to study this stock and I really wanted to trade Intel, which I don't, um, you could really tweak these things and, optimize them. So you're really going to get the exact same signals on everything. Like for some reason, this one here seems to be, really tight. But like I said, if you optimize these things or tweak them, you can get them all to really look the same. And that's why it's kind of pointless to have a bunch of them. Like I said, just have one or two and just optimize it for each thing that you're trading. Here's another example of Bristol Myers. You can see again, like here's another good example. Overbought, 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 overbought. Then here, when we get back in, oversold, 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 oversold. All right, so this here is the money screen, and this is why I wanted to have this lesson. Because when something is, we'll go right here to the conclusion. When something is overbought at support, or I'm sorry, when something is overbought at important resistance and it breaks its uptrend line, there's a trade opportunity. Conversely, when something is oversold at important support and it breaks its downtrend line, you're going to have a trade opportunity. This is the key right here. You do not enter the trade until the trend reverts. I define this as a break of the trend line, right? The reversion. Too many people try to catch the exact bottom. And I think that's just a human necessity to try to prove you're smart. But in reality, 90% of the time when I see people do that, they're really just guessing. You need to have a reason for entering a trade. You can't just say, oh, I think it's time to buy. In this method, the reason is that it's getting above the trend line. That's called your trigger. You shouldn't enter a trade unless you have a trigger. You have to understand bottoms and tops are very different. Okay, tops are due to hope, so they're a lot less volatile than bottoms. Bottoms are due to fear, so they're much more volatile. So when you're looking at these things, you have to give yourself a little bit of leeway and a little bit of discretion, in my opinion, when things are on the bottom. One of the things that I really like to do is I like to look for equities that are oversold, okay, and trading at levels that have been supported in the past. Then I wait for the reversion to enter the trade. One of the things that can help you out with this is capitulation volume and reversal days. Capitulation volume means something's been going down on volume, 50,000, 50,000, 50,000. Finally, whatever the institution is that owns this, they're maybe down to their last, 100 or 200,000 shares, and they say, let's just get rid of this. So they just, in trader term, they just puke it out, not really caring about the price, because they've sold enough of their position that this isn't going to really make a huge difference on the overall average price. But basically, they just get sick of it and they puke it, and that big capitulation volume, it could be a sign of a reversion. Other thing important to watch is reversal days. Basically, a reversal day is a day that starts near its top, goes down during the day, comes all the way back up, and closes above where it opened. All right, so this shows that at the beginning of the day, the forces of supply were in charge. By the end of the day, the forces of demand had taken over, because basically there's just no more sellers left, and if the buyers want to buy it, they have to pay much higher prices because there's no one left to sell them. So that's just something to consider when something has one of these reversal days. it's one of the main factors is that, yeah, well, obviously there's buyers buying it up, but there's a lack of sellers. And that means if you want to buy it, you need to pay higher prices. You can't just be content to sit there and wait to get a lower price. No, I'm sorry. All right, so here's Apria. I wish I had a longer chart, but if you look back, you can see that 13 was support, and you can see that on my blog. But anyway, so we get up to a resistance level, and we were looking for resistance at 13 because it was support, back there, which I foolishly did not put on. But overbought, resistance, sell off. Overbought, resistance, sell off. Overbought, resistance, sell off. All right. Oversold almost. Well, kind of. Signal's not as clear there. And then, here's just a kind of an example for using this for your trading, right? This thing gets oversold and it reverts, right? So you didn't make an instant profit, but if your stop out was like down here, which is probably where it should be, you didn't get run over. And if you held on to it, you were able to make a profit. So this is what I mean by when you're waiting for this reversion, it's a lot less risky because this wasn't able to get back above this 1130 level, but you haven't lost any money because it's just been consolidating. So I guess it's kind of like golf, right? Golf is a game of misses, and it's kind of the same thing with trading. Is worry about your losers because the winners will take care of themselves. Now, this is how you can kind of use this stuff for a trade setup, and this is from my blog on June 8th. So just looking around, one of the things I like to do to look for ideas is I look at the 52-week low list or the 3-year low list or any kind of low list. And I look for things that are oversold and honing in on an area that was support in the past. So sure enough, I came across this thing, FBZ, which is the First Brazilian Trust Alpha Dex Fund, which I had never even heard of before. But you can see this, right? This thing is down really big. It went from 16 down to like 13. So that's a huge drop percentage-wise. Oversold, okay, at a level that was support in the past. So like I said, don't try to catch the bottom. Wait until it's on its way back up before entering the trade. So guess what? In this case, this one worked out. So here's a year-to-date chart. You can see I waited. Here's the sell-off that we just showed. Now, a lot of people are probably bottom fishing, trying to catch it here, trying to catch it here, trying to catch it here. I waited, and I bought it on this little teeny tiny day there at 1177. I think that was July 19th. So anyway, but I waited. Now I had my stop out here because this was the most recent low, so I never got there. I didn't get stop out. I know that there's going to be resistance around 13 because that's where the support was that we talked about. Although it kind of smashed right through here, but it was still something to, to consider because of what happened back on the prior chart. So anyway, so this thing gets overbought, approaches resistance, and I sold it because it was overbought. So I was able to sell it at 1285 on, I think, July 30th. So, a couple days, not a huge trade, but if you annualize it, it's good numbers. All right, this is just the same chart, I guess, with just a closer up detail so you can see a little bit better. Bought it here, sold it up here. So, overbought and at your target, you pull the trigger. And, you always give yourself a few cents discretion. It's like if you want to sell something at 13, my advice is sell it at 12.95 because it might never get to 13 and you're going to miss it for a penny. And I've seen that happen to a lot of people, including in professionals that get paid a lot of money for doing this. All right, now here's something else. This is another trade setup I looked at, and this is another one of these legal cannabis stocks that I follow. So I was watching this $3 level, right? because it was support here, oversold, support here. So this thing broke and it was in like a free fall. Okay. So here was my thinking. First of all, it's oversold. It's down big percentage wise. And there's probably going to be some support at 2 because, there was some importance back here, but it's important psychologically. If the stock goes from 3 to 2, people are going to want to buy it for no other reason than they like the way the numbers sound. So I'm thinking, oversold, coming to support. It could be a dead cat bounce. So just watch it for the same dynamics of the last trade. Okay, so gets down here, breaks this downtrend. I bought it at 2. I had a settled target of 250, but like I said, I always take a few pennies discretion if I'm going to be at a round level. So oversold, at support, breaks this downtrend, I enter the trade. Okay, this is the same chart, just more forward in time. Oversold, breaks a downtrend. Okay, gets up to 245. Within 5 cents of my target, I sell it. So I sold it at 245 on July 30th. So again, same dynamics. Oversold, at support, wait for the trend to break. And of course, this is obviously on the short side, it's the opposite. Okay, this is just the same trade, but with a little more detail. So, here's your trend break. I bought it the next day at 2. And then, actually, I don't know if it was the 18th or the 19th. I'd have to look at that. But it doesn't make a difference. So then you can see right up here, got to 240. It was actually got to 246, 247, but I sold mine at 245. So another profitable trade based on 3 simple things. Now here's something else to look at. This was on my blog on July 13th. So this has all the things I like, okay? It just broke the support level. Stock is in a free fall. I thought there was going to be support at 375 because it was resistance in here. Okay, so I'm watching this for the trend break. Oh, and this is what I was talking about. This could be what you call the capitulation volume. See, there's big volume there. Okay, oversold. So we have oversold, we have at support, but we don't have the trend break yet. Now, here we go on August 2nd to just follow up, all right? This trade was never entered because the trend line was never broken. If I was a bottom fisher, I would have tried to catch it here and here and here and here and here and here and here. And, ultimately probably would have gotten run over. So you can see the capitulation volume is increasing. We're getting more oversold. So, I mean, I'm kind of keeping an eye on this one, but I'm quasi keeping an eye on it. But I guess my point is what I want you to see here is that if you wait for this trigger, if you wait for this trend line break, then you're not going to get run over. Or, I mean, it's not perfect. You're going to lose money sometimes. That's just how this game works. Remember, I said the most successful traders are only successful 58% of the time. Of course, they're trading hundreds of stocks at a time, and they got a lot more to worry about. But if you're just looking at 3 or 4 things, I think you could have a better ratio than that. So again, at support, oversold. So those are 2 of your setups, but you never got the trigger of the trend line break. So this position was never taken. All right, so just remember, this is stuff savvy traders can recognize. You can use these dynamics to profit from them. It's real simple stuff. Oversold at support, breaks the trend line, you go long. But make sure you have your sell orders in place. Like, you should not enter a position, you should not enter a long position unless you know where your 2 sells are going to be. And this is the most important rule of this kind of trading. You should not buy something unless you know where your sell stop is and where your profit sell is. All right, it's the most important rule of successful trading. It's more important to know how to sell than to know what to buy. You know, quant models have been programmed to recognize this stuff. So that's why when you see a stock like Apple that's so heavily traded, the reversions are so small because there's so many players involved in stocks like that, that from the continuous tweaking and tweaking and tweaking, you know, they're just trading for smaller and smaller and smaller amounts. And what I've heard is actually a lot of these quant funds have not done so well, relatively speaking, over the past couple of years because now there's just so many of them. The competition is just too intense. So anyway, so that's it. Thanks for listening. Just wanted to review overbought and oversold. There's a damn thing. So just remember, when something's overbought and oversold, pay attention because it's either reverting or going into a new trend. Overbought at important resistance, break of the uptrend line, you got a sell or a short opportunity. Oversold at important support, break of the downtrend lines, buyer cover opportunities. All right, so that's it. Thanks for checking in. We're going to be having another couple lessons hopefully by the end of this week.